Hello, everybody. Welcome to this webinar from Reuters Events. It's entitled New Business Acquisition in a Digital Age in Insurance, obviously. And the context here is it's something we've all been living with, God, for months now, but it's not ending. And it is this period in 2020 where we've had this really rapid, just unprecedented shift towards digital in everything we do. And in particular, it's changing the way that we think about customer acquisition and retention for our current customers, because all these interactions are completely different by necessity and because people's preferences in their entire lives have changed. This conversation, which is brought to you by WNS, is part of the series building up to the Future of Insurance virtual event being held November 16th through 18th from Insurance Nexus and Reuters Events. I will point the link in the chat so that everyone can directly go there and register. It is free, so you can join this event and get conversations like we're having today in a much broader context of different issues and topics, get more Q&A, and be a part of that November 16th to 18th. Again, watch the chat briefly. I will put the link up there. I'm Brian Falchuk. I'm your moderator for today's panel. I'm the managing partner of Insurance Evolution Partners and the author of The Future of Insurance: From Disruption to Evolution. And I'm joined by a great panel that I'm going to introduce one by one as we hear some thoughts from them. And then we're going to open it up to Q&A from all of you. I will say you can ask your questions at any point during this entire event. You don't have to wait until the speakers are done. Just be sure to use the Q&A button at the bottom of your Zoom screen. So with that, let me introduce our first speaker, Justin Gress, who joins us as the Director of Strategic Operations at AXA XL, where he's responsible for owning and driving strategic initiatives across all of North America. Justin, thank you for joining us today.
Thanks, Brian. Great. Well, today I wanted to talk to you about some work we're doing at AXA XL that very much fits into this digital journey and discussion that's our topic today. A few years ago, I was Chief Operating Officer, COO of our construction insurance business unit, and we were faced with a new challenge, which was we were regularly being contacted by different startups, different technologies, all digital, wanting to know if they could partner with their technology or service with our large construction customers. At first, my boss, Gary Kaplan, our president of the construction business, and I didn't take them very seriously. We didn't know who they were, the way they contacted us, et cetera, was mostly through LinkedIn or through what kind of looked like some kind of, standard email, general email. At the same time, we started having customers ask us about these technologies and wanting to know if they could pilot and partner with us. We started to pay much more attention. We focused with our customers on what are their biggest business challenges, and not just some of the typical things you might think of from a digital experience or from an insurance carrier experience in terms of how to get your policy or your loss run or make an endorsement on a particular policy, but truly, what are your biggest business challenges and how could AXA XL help address those? We did a series of different technology pilots focused around the construction industry with a handful of customers. And we started to listen to our customers about their feedback from those and what their challenges were. And what they were really looking for was a digital platform that gave them a few different things. One is it gave them an idea of which of these technologies or services they should use in their businesses. Being the construction industry, I'll give a couple of examples. Could be environmental sensors. It could be 360-degree cameras. It could be artificial intelligence. Today it's about sensing, proximity of workers to one another. So that was one piece of something they're looking for. They wanted to understand how much to pay for those services. What was a fair price? They wanted to see how that had impact on, from a predictive perspective in terms of how do we prevent or potentially prevent claims? Could we see some claim benchmarking? And then also, could we see how these technologies interact in a digital platform together? So if we pulled up a construction project on a computer screen, could we see all these different technologies working, sensing things and sharing with the risk manager with the project and safety managers on the job site. So over the last couple of years, XXL, in partnership with these customers, went out and built this digital platform. We've released it, this construction ecosystem, to 6 large construction contractors thus far. We're pushing it further out into the market later this year. Very, very exciting, but very much customer focused. And it's a completely different digital look at how to address our customers' needs in a very unique way. One that we're getting a lot of positive feedback on, and ultimately, we feel that this is the way of the future. In some ways, some days I feel like we're a little bit early. In other ways, I feel like we're right on pace, and this is a unique differentiator. The most important thing is helping our customers find those insights in a new way. I can tell you that like everybody else on this call, nobody had anticipated that we'd be in the situation we are this year in terms of COVID. We've had to adapt and adopt like everybody else. And I think this platform has actually helped with that. And I think that's helped with the usage of it. It's helped with taking it very seriously in terms of providing that digital view that these individuals, these clients didn't have before. And if we continue in this environment of part in person, part virtual for the foreseeable future, technologies and having a digital platform like this is something that can be very, very beneficial. So I'll stop there. Happy to take questions throughout, but Brian, I'll turn it back over to you.
Thanks, Justin. And I get to cheat a little bit on your story because it's one of the case studies that I wrote about in the book. But it's really interesting to me how, as hard as this moment is for everyone in this period we're in, it's an opportunity that, maybe without it, some of the things that you guys have done on the ecosystem front, some of the digital tools would have been slower to be adopted. But now they're even more beneficial or imperative, really, some of them, for your insureds, not just to lower their risk, but to stay in business and to thrive. So there's some upsides to the necessity that we're all facing. So thank you for those thoughts. Basil, I'm going to turn to you next. We have Basil Morris joining us from Nationwide, where he is the Vice President for Strategic Planning. He leads the annual strategic planning process and initiates and undertakes major strategic projects for Nationwide's $10 billion P&C business. Basil, excited to hear your thoughts.
Thanks, Brian. Great to be here, and I'm glad to share some thoughts. What I do in strategy a lot is looking at the market, looking at trends, looking at customers, and trying to provide guidance to the organization. So I'm going to share with you some of the things that we're seeing, and hopefully that'll help you in your transformation journeys. We see really that digital transformation and digital sales transformation has been underway for years, but it's really gone into hyperdrive with COVID. Couple studies that I'll just quote from, that 71% of consumers use some form of digital research before buying insurance, and 26% of consumers in the US bought their policies totally online, no phone, no visiting in office. When we look also at agents and distribution partners, 80% of agents in a survey that we conducted said they changed the way they sell or market due to COVID. And 60% of agents say they're facing challenges shifting their agency's marketing to a more digital approach. So again, as Brian is saying, these create opportunities for wins as well as challenges for us. But it is challenging. Because customers' expectations have changed and continue to change. What we used to think of as fast was next day response. Then we said, well, maybe it's same day. Then maybe it's an hour. But Google's really changed our expectation around fast. If something takes more than about 5 seconds, we're not happy. Customers aren't happy. Agents aren't happy. Always on, 24/7. Nobody says, hey, I got to go do business between 9 and 3. It's 24/7 and everything's mobile focused. Does anyone that has children or yourself, are you ever away from your phone? My phone is sitting right now 18 inches away from me. So we're always on, always mobile. So I also want to add, though, that when we think about selling in the digital environment, we really have two customers. There's an end consumer, but there's also the distribution partner or agent. And both of them are important, particularly in property and casualty. 95% of commercial lines premium is with an agent right now. It's actually it might even be higher. And even though direct's been growing in personal lines, still 70% of the premium is managed through agents. And when we've done research, we find that customers tell us that the agent's recommendation is the second most important thing after price and coverage that determines the sales process. So who are these agents? Well, what's great is that agents are transforming at the same time we are. There are 36,000 agents in America. Some of them are the local agents that we think of, but they're also global billion-dollar brokers. And in fact, the top 100 of those brokers hold 60% of commercial premium. So there's this wide variety, and they're innovating. We find a lot of agents have digital marketing arms today. They have call centers. They have robust analytical capabilities. They can be great partners with us in solving for this future of growth. There's a lot to unpack here, but I believe that insurance carriers can win in this new environment, and I think agents are a critical partner in doing that. We're going to be able to leverage digital tools, data, analytics to deliver those solutions. But I'd like to close by saying it requires us to do things differently, and this has become a bigger and bigger part of my job and strategy. It's not just a digital version of doing what we've always done, but it's a comprehensive rethink and redesign, and that we have to work differently in order to do that. We're using things like design thinking, which wasn't even an idea 5 years ago in insurance, but we are, and I think many of our competitors are also using design thinking to empathize and deeply understand customer and agent needs, doing journey mapping to get the solution right, agile teams to increase speed to market. And at Nationwide, we're seeing the results of that. Nationwide Express is a tool that we offer to agents and direct to consumers that quotes auto, home, renters, and more products coming in the months to come in as little as a minute. So you get a quote in a minute, one entry, and you're done. And we did that completely with an agile team. And we were able to get something in market within 3 months. And those who've been in insurance a long time know that usually getting something in market takes years. And so different way of doing things, faster, quicker, new tools. And in closing, I'd just say a couple of things to think about. One is build for both the customer and the agent when you're solving for how to sell in the future. And compare the experience we're delivering to what we experience every day, what you experience every day from your interactions with Google, Amazon, Apple. Is it easy? Is it intuitive? Is it fast? Is it personalized enough? Because customers are setting their expectations based on those experiences, not based on the last time they purchased insurance. That's what I've got. I'll close out here.
Yeah, that's great, Basil. And your call for us to think about the customer, the end insured, and the distribution partner. Maybe I'll broaden the term from agents or agents and brokers, because there's lots of different ways that we're distributing these days, and who knows what we'll do 5 years from now. But it's spot on. Is I find sometimes we get in this debate philosophically about who is the customer, who's our customer in that chain. Is it the end insured? If we have an agent that we're working with, it's everyone. And you are serving all of those parties differently. And if you just focus on one or the other, you miss some really critical must-deliver items. So spot on.
Yeah, and Brian, just to build on that, there are a variety of different types of distribution partners that include sometimes companies like Amazon and Apple. So it's something definitely that's evolving.
Yeah, no, I definitely appreciate that. Think differently about it. I've noticed some questions coming in the chat, so please do put those in the Q&A so that we can manage them there. If you put one in the chat, just copy and paste it into the Q&A. but great to see questions coming in, so keep those coming. We're going to shift a little bit from the P&C space to the life and investment side and financial planning side. And we're joined by Scott Absher, who is the Chief Field Officer for Prudential Advisors. Round out the perspective a little bit. Scott leads the national sales organization at Prudential Advisors, which is comprised of more than 3,500 financial planners, fee-based financial planners, financial advisors, and field managers. So Scott, I'm excited to hear another perspective on this digital customer acquisition and retention point that we're all facing.
Yeah, thanks, Brian. And actually, it flows well with Basil and the comments that have already been made, because I am on the distribution side. I have been in the distribution side actually for 29 years. I would say that we've seen more changes in the last 5 years than I saw in the first 24. It's been an amazing transformation. I'm going to talk a little bit about the history of sort of how we got here, but before I do that, I want to make sure that for our audience, you sort of understand how we fit into Prudential as a global financial powerhouse. We're like, a small portion of a business, and we do distribute advice, and that advice comes with meeting needs of our customers with many different products. Those products include financial planning, certainly annuities, life insurance, and a broad sweep of investment opportunities. When I think about sort of where we are in this environment, I'm not with a manufacturer, so one of our key opportunities is to collaborate with people like Basil in our home office, and to make sure that system or this distribution, the digital technology, is user friendly. And I'll take you back a little bit on a journey, because our system, the company I joined 29 years ago was a big US-based life insurance company. It was a mutual company. And so I've seen a lot of changes over the last 29 years. But some of the changes, I think, with technology have really accelerated both the simplistic nature of what we can do to meet our customers' needs, but it's also made it more complicated. In fact, I think about 2015 when we partnered with some key industry manufacturers in terms of the investment space, and most companies would see these companies as best in class. But when we brought these companies on the platform for wealth management, one of the things that was very interesting is their technology had outpaced what our advisors were used to. They had capabilities, and so we spent a lot of time from 2015, 16, 17 really training and figuring out how to get our advisors up to speed with the technology and be able to interface. And part of that is really doing business electronically, signing apps electronically. When you grow up in a face-to-face distribution system, we were a paper-based company for a lot of years. So 2015 sort of helped us get ready for what the next major event was, and that was the Department of Labor when it came out in 17. We had to make some really, really tough decisions in 17. And I talk about 2017 because we built a system that was fully compliant with the Department of Labor that obviously everybody knows never fully got implemented. But more regulation continues on the way, things like Reg BI now and fiduciary standards and other things that we have to comply with for the goodness of our customer and the reputation of our industry. But in 2017, we built an end-to-end system for client engagement that started with a CRM system. We actually use Salesforce, and completely went through with each one of our manufacturers. And actually at that time, we mandated electronic apps. And the reason I talk about that is, and I'll give you an example just with our annuity company. When we mandated electronic apps, and you say mandate but by exception, we were at 95% usage for electronic apps when the pandemic hit this year. And so that was really good for our advisor force, because we were already doing business electronically. 99% of our life insurance apps were electronic, 95% of our annuity apps, all of our investment business. What we were unsure of, and this is where I'll bring maybe a different perspective, is we knew how to do business electronically. What we didn't have confidence in is how do you holistically do financial planning like what we're doing today through video? And that was another confidence barrier as you think about the evolution of change is how do you face off with a client or a couple or a business owner and really have an in-depth conversation. And what we found out is not only did it accelerate our learning in terms of doing planning on a virtual nature, the clients were forced to accelerate too, because exactly what we're doing today, we're all virtual. So they had to lean in and start to learn technology. And I actually think it made our journey easier. So, you know, we had an amazing first quarter. We saw a dip in the second quarter. And then right now we're sort of getting business back to the new normal. And certainly in this pandemic, I think we all would agree that health and wellness came to the forefront of what clients expect in our advice. So the organization I work for too, as we think about, you know, questions and how we're all situated for distribution, and Basil mentioned all the different opportunities for us to distribute products. I actually work in an organization called Retail Advice and Solutions. And so we have digital capabilities and we're able to use those technologies to engage consumers and customers at the workplace. We actually have a hybrid desk where we have hybrid advisors. And obviously we have our full service advice model that you mentioned that I run. So we all agree that Amazon, Netflix, the ability to log on and have ease of doing business as a customer, and then actually to track what's going on. I mean, we've built some really amazing technology that allows a customer to see where they are in the buying journey, you know, where their life insurance application is it going to get issued, and what's the time frame and the expectations. And so as we think about, I think, how we meet our customer where the customer wants to be met, it's not if and when, it's all here. I think what happened in the pandemic, this technology existed. It just accelerated all of us to lean into it and actually start to use it. So I'll pass it back to you, but that's a little bit of sort of our journey.
Yeah, it's a great perspective. You know, as much as people say P&C policies are you have to buy them, but you wish you didn't have to, and you certainly never want to use them. The products in your space we're expecting to use, whether for ourselves or for our loved ones, but those annuities, the financial planning, that's the solidity that we're going to depend on, not hope not to have to. And of course, life insurance, there's no way around it. You're going to need that, or those that you care about will. So the need to be in person feels even stronger there. Yeah, it's a space that instantly you come to mind of sitting around a table and having this very real talk about what your life is going to look like down the road. So it's great to see how the technology is getting adopted, but clearly a space where that emotional connection is perhaps even more central to the interaction, you know, than we might think about in P&C. So I appreciate that perspective, Scott. Mitch, we're going to pass to you next and provide a broader perspective across companies, across the industry. Mitch Wien is the SVP of Research and Consulting for Navarica, where he leads technology and strategy research. He was formerly Chief Technology Architect and Head of CTO for AXA UK. Mitch, take it away.
Hi, thank you. So I found all of the comments from Scott, Basil, and Justin very interesting and pretty much in line with what we're hearing. Navarica is a research and advisory company that focuses in on technology challenges for insurers. And we look a lot at how customers are acquired, the optimization of distribution with carriers, and the challenges and opportunities that new technologies bring. So one of the things I wanted to do is just share with you very briefly a couple of slides that talk about everything that we're seeing in the insurance industry. And again, we have 350 insurer companies that are on our research council, which represents a large percentage of the industry. So we kind of have the eyes and the ears of everybody and what they're doing. And then we have over 125 carriers that are part of our advisory service itself. I'm going to zoom in very quickly on a couple of interesting things. I think one is some of the things we're seeing on the life side to kind of build on some stuff that Scott talked about. And then just generally with P&C and life, some approaches to customer experience and user experience, and how that's kind of building on acquiring customers and the challenges. So some of the things that we're finding is, the main thing is, and I think this was brought up earlier around this notion of the agents being the primary way that customers are acquired by insurers. We're seeing that straight-through processing is extraordinarily important, to be able to have the agents put things in and then hit a button and have that go directly to the carrier where it can be processed. And that includes things like e-app. We don't want to be filling in these really long paper forms and mailing them in the way our parents used to. That doesn't make sense. We want to deliver everything, obviously, with electronic means. And these days, that's really the only choice available because we're not seeing each other in person anymore. We want to be able to do e-signature. And actually, many states have authorized now e-notarization as a result of the pandemic. So in the old days, you had to go to a notary and have it stamped. Now you can actually have remote notarization done in almost half the states now. Obviously, the agents also are there to service the relationship once it's kind of booked. And so, you know, being able to get the right documents to the policyholders at the right time. The other challenge that we've been seeing, and I know carriers are investing in this, is addressing some of the post-issue service capabilities, because where we kind of compare ourselves to the Googles of the world or the Amazons, insurers, frankly, haven't been as mature. We don't know where things are when we put them in. We don't get a real-time status texting back to us in terms of somebody's looking at the application. It's been approved. Here's the premium, etc. So some of the priorities that we've seen are enhancing the portals and making them much more robust in terms of mobile channels. We're seeing the increased utilization of data and analytics to improve the performance of the types of products we have, make them sell better, make them more aligned to people's needs, and also help our agents and our brokers work better as well. Additionally, we've kind of moved away from filling out those really long forms. If you remember going back to filling out 100 question or more forms, accord forms, we'd like to kind of ask a couple of questions and grab a lot of third-party data to fill in the rest of the questions for us. That makes things a lot better. And then, of course, finally, a lot of agents are independent, and we want to be able to service them better too, being able to give them transparency in terms of what they earn and being able to pay them quickly. On the life side, we've seen the need to have, you know, illustrations and needs analysis tools, because life insurance is really part of financial planning overall, looking at the needs of my family and my financial needs, in particular now with the pandemic being even that much more important. We mentioned pre-fill of data, but other things as well, policy inquiry, endorsements, changes in beneficiaries and whatnot. There have been a number of microsites that have kind of popped up that are specific to specific demographics. There's some insurtech startups coming out of San Francisco that have kind of focused in on opportunities to improve that experience and acquisition. We've seen educational materials and planning tools and online account views all be kind of integrated together so people can get a holistic view of the financial situation as they're doing that planning with their broker or agent. And then we've seen new channels being introduced as well. And these can be all sorts of non-traditional channels to sell insurance, perhaps through other vehicles, other websites, through partnerships and affinity websites, etc. I mentioned Canada Protection Plan here because they did some interesting things to integrate chatbots and Alexa. So that's another interesting thing is, do I really need to go to the agent anymore? Can I say, Alexa, life insurance? And it says, yes, there are 3 carriers that offer life insurance for what you would like. Would you like to cover your spouse? Yes, I would. I see that you have 2 children under 18. Would you like them to be included as beneficiaries? No, thank you. They go out too much. And so then we're really trying to integrate a fully digital experience. And while we're doing that, we want to collect analytics about that experience. So one of the things we're seeing is semantic analysis. How are you feeling while you're interacting with me? You know, in the old days, I kind of knew how you felt when I sat across the kitchen table from you and sold you a life policy. But today, in our digital world, we don't necessarily know how you're feeling and what you're experiencing. And that's important for the agents. That's important for the call centers that are interacting with you. So we see a lot more types of analytics, a lot more data being brought to bear to give you the best possible experience with the best possible products. I have an example here with Securian. They did expanded eligibility for underwriting, and they basically use tele-interviews and third-party data. So, you know, now I'm not going to necessarily send a nurse or paramed to collect fluids anymore. That's not feasible. So what am I going to do? I'm going to use third-party data like pharma data. I'm going to do a tele-interview. Maybe I'm going to have the doctor's file electronically sent over to me with my authority and then being able to read those notes. We're also seeing the tracking of compensation, because not only are the policyholders or potentially policyholders customers of the insurance companies, but those agents are too. And we heard earlier, they're the ones that are bringing the business in to the carrier. So we need to take care of the agents in this digital time, in this time of pandemic. We need to track their compensation. We need to make sure they're getting paid timely. Delays and incorrect compensation is no longer acceptable. And then we're allowing those producers to have a lot more self-service. They don't have to call an insurance call center anymore. They can go online, they can update beneficiaries, they can get claims experience, they can do all sorts of things they need to do. They can model their book of business with that carrier, etc. I cite here Prudential as an example of that, where they're giving tools to their agents to track and monitor policy performance proactively. So I'm helping the agents make money, be successful, and that's just as important as providing quality service and quality products to those policyholders. Going forward, we're going to continue to see investments, and we just did a 2021 budgets and project survey of all the carriers. Very interesting, and we see a continued focus in this area. When I think about the design, though, I talked a lot about the digitization of the experience. You know, digital marketing is a science unto itself. And this was a science that was not really well evolved in the insurance space. So now we're using things that traditionally had been used by, for example, retail. We're starting to do things like Net Promoter Score to understand if people would actually recommend that experience to their neighbors, their friends, their family. And what we found, and what carriers have actually found and told us is, hey, we realized in the pandemic, we have to be better, and maybe we don't have the people. We don't know how to be better. So they're hiring people, often from other industries, to help them to evolve those experiences. And we're seeing a dramatic evolution in what carriers are providing to agents, brokers, and policyholders in the context of this. So those investments are starting to definitely pay off. When we look at the challenges, though, we have different segmentations in the industry. We have large or mid-sized P&C carriers. We have larger life carriers or mid-sized life carriers. And there are differences, right? There are differences in the way the products are distributed. There's differences in what's available, what the primary channel focus may be, how I measure how productive my agents or brokers are. And so the essence of this is, you know, am I getting the right money, the right focus to the right people in the right context for the right lines of business? And that differentiation allows us to be successful in our own context. And then finally, I just wanted to conclude here. There is no consensus that we've heard around what good looks like, what excellent looks like, what best looks like in insurance in this new pandemic world where digital is everything. We're kind of learning as an industry. That's what we've heard. But one of the things we've definitely learned in 2020 is that customer experience and user experience is absolutely critical and important. And when I talk about customer and user, I'm talking about agents, I'm talking about policyholders. And interestingly enough, more recently, I've heard from carriers, they're talking about employees as well, because employees are interacting digitally. And so now I have to worry about these exact same challenges for employees because they want to retain them as opposed to having them leave to go somewhere else. The other aspect here is brand, building a brand strategy. And in particular on the life insurance side, we've seen even more important with that. So tying in the experience that we provide digitally to the brand and how that brand and experience complement one another. And we're going to see a lot of technologies, I'm sure we're going to talk about, a lot of technologies brought to bear on this, social media monitoring, behavioral analytics, and other tools that will really enhance the omni-channel experience and link it together consistently. So that's it. And, you know, of course, we have lots of research at Novarica that talks about all those interesting things.
It's a plug for Novarica, but it's reality. I've always appreciated the research that comes out of the team there. And so yeah, it's worth it. That's not just a commercial plug. It's genuinely worth everyone's time. And Mitch did not pay me to say that. So that's a very true statement. Mitch, you did say something that struck a chord with me. And one of the questions that came in was specifically around internal employees and whether we should include them in that definition of customer. And from my perspective, yes, we should. I mean, we've been focused on the outward, right? The acquisition, whether that's our distribution partners, which maybe are employees, you know, maybe that's an owned sales force or end customers, but there is a third leg to this stool. So I appreciate that you brought that up. Great point to hit home that there are a lot of minds that we need to be thinking of as we do all these interactions, because the best tools in the world are worthless if we don't actually know that our people will use them, know how to use them, and they actually help them in their work. So great examples across different companies and industries as well. I'd like to open for Q&A. We have a ton that have already come in, and it looks like more are flowing as we go. So everyone has shared some great insights that sparked more thoughts. I wanted to start with one in particular that maybe is a bit existential for our customer base. And I think this one is aimed at the end insured in particular. But it says, when going digital in customer acquisition, do we think the fabric of the customer base will change due to the affinity shown towards digital first channels? So is this more digital interaction going to change the makeup of our customer population? Basil, I'd love to start with you and get the take from Nationwide, because you're seeing across personal and commercial here.
Yeah, I think that the customer is changing, both in terms of who the customer is for different products. If I mean by customer, who's the primary decision maker, moving some from agent to the end customer, and some from different types of intermediaries and partners. I also think because of the change in their expectations, that what we have to deliver is changing, and in a way that's a change in the customer. If a customer expects something instantaneous, if a customer expects to be able to move in and out of products and coverages as their needs change, that is in effect a change in the customer, even if the name on the policy stays the same.
Yeah, it's a fair point. Justin, you have a more complex customer base, larger, risk engineered, but also, you know, moving digital. How have you seen this playing out? Are you seeing a shift in the profile of your customers as a result of moving digital?
Yeah, I do, and I agree with Basil's thoughts around this in terms of I think it continues to evolve. I think there's so much information out there that can be, you know, viewed by our end customer, our true client, that they're able to do a lot of their own research. And I think you see a shift in terms of not just the broker giving advice or suggestions on looking at a particular carrier, for example. We see our end clients suggesting, well, why not this carrier? Why not this product? And kind of reversing that role in some ways. So I think we're going to continue to see that. You know, we're here to work with both 100%. But we see, you know, this continued opportunity to both educate around some of that more specialized knowledge, Brian, that you mentioned. From an educational perspective, as well as we see customers asking, well, why not this or why not that? And that's a good thing. So I think it's our role to provide some of those resources to help them as they work through that journey.
Yeah. Scott, I'm curious on the life and annuity side. Is it, I imagine you face the same question, but is it one of actually having potential customers or existing customers left behind? How do you sort out that there is a bit of a bifurcation, those who are more pushing for this or accepting of it, and those who are really uncomfortable and would rather wait than purchase something in this kind of environment, whether that's the right call or not for them?
Yeah, it's interesting coming off of September Life Insurance Awareness Month, and where we noted there's a $12 trillion insurance gap for life insurance specifically. I think what we're all trying to figure out is, how do you meet the customer, whether it's on a digital basis or, again, a hybrid opportunity? The way that I see the future of the industry, and this is sort of relevant to the company we bought at the end of last year. We bought a company called Assurance IQ. Made a big investment. It's in a technology company. The way that they meet the customer is completely at the opposite end of the spectrum in terms of how we met our customers. It's a full digital experience. It's a different way to bring customers into the system. And the way that I think about it is, if I meet you through an Assurance IQ relationship and you bought auto insurance or whatever you wanted to buy, maybe as a single product for a single need, at some point, we're hoping you hit the advice button and you want to have a deeper relationship. And sometimes I like to refer to turning customers into clients and having a deeper relationship through advice. So I believe that the multi-channel has turned into an omni channel. And again, it may go back and forth in terms of how we meet our clients, but they want a digital capability too to make changes or at the speed of how we think about the adjustment of their life and their expansion. They may not want to have a full advice conversation. So yeah, I think the opportunity is more of omni-channel now versus how we were siloed in the past, and this was our customer and that's your customer. Digital versus advice, I don't see it that way anymore.
Yeah. Oh, that's a great point. There's another question that refers to everyone, Mitch, except for you, but everyone on the panel being from old companies or legacy companies. And you can look at it that way, or you can also look at it as these are companies that have an existing solution for a way of working and the ability to expand into others versus just being from one generation or another. And omni-channel, I think, is exactly the point. And Basil hits on your point earlier in the opening about multiple different ways that people are interacting and buying policies. It's not purely digital or this one kind of digital, because there's lots of different digital, and not just more traditional. It's everything, and people will change and they'll move back and forth, and we have to be able to meet them. So great point, Scott. Mitch, looking across the industry and across carriers, what are you seeing on this point about, maybe people being left behind, or the makeup of the customer base shifting as the interactions, the type of CX moves?
It's actually, a lot of it is coming from the generational change itself. More than 50% of the workforce in 2020 are millennials right now. And between now and 2030, we're going to go from 50% millennial to 75% millennial to towards around 2030, where millennials and Gen Zs will be the majority of the workforce, with the Gen Xers being a minority, because there's actually a lot less of them than either of the other two. And only 5% of the workforce remaining is baby boomers in 2030. So we're going, from 40% of the workforce to 5% in 10 years. And the Gen Zs are basically linked by their umbilical cords, if you will, to smartphones. So what is technology for you, for me, may be simply a phone for the next person, or electricity for the next person. So their expectation of what you should be able to do and when you should be able to do it is altered dramatically. If I expect you to be able to interact with me at 3 in the morning to help me buy my policy, because that's when I got back from the bar, you better be there for me. I better be able to hop online and, you know, take a look at different products and then maybe hit a button and want to text with somebody. Now, am I texting with a human being? Maybe not. Maybe it's a chatbot at 3 in the morning. But the point is, my primary way of interacting with you is going to be some a variation of digital. Versus if I'm an older person, I still want to meet that agent. I still want to know that agent. I don't want to get advice from a robot or a kind of augmented human experience. I want to sit down with somebody at a desk in a nice paneled office, ideally, hopefully that'll still be the case after the pandemic, and talk with the person and talk about my experiences, how I'm feeling about retirement, how I'm feeling about planning my assets, etc. You know, aspirational goals if I'm younger. So how we think about planning, how we think about insurance in the context of planning, because that's really what it is, and then how we interact with the people that manufacture the coverages and the risk. That's a big deal. We have one of our research goes into this notion of how the expectation has changed from being purely one of price and coverage to one of experience, price, and coverage. So now I care about the quality of the experience I'm having, not just the fact you can do it cheaper for me.
Yeah, well, that hits on another one of the questions out there about, do any of these changes stop making price? Scott, I think it was you who said, or maybe Basil, sorry, is, you know, price was number one, and then it was the insight from the agent. Basil, I think that was you, actually. So, you know, here is perhaps a chance to create an experience and a product that might make price less of an issue. It's very interesting. There are a few questions that I'm sort of going to lump together because I think they're ultimately hitting on something that's A, provocative, and B, has been touted for as long as I've been in the industry. I mean, certainly since the internet came to be, and probably before that, about this is the end of brokers and agents and that distribution channel. And, you know, we've had stats that it's actually still quite a thriving channel, and there's lots of reasons for it to continue to be. But in particular, as we move to a digital experience and digital products, digital first products, someone asked about them as being purely online. You know, Scott, you had talked about that with Assurance IQ and that process. Are we setting up a situation where you don't need a distribution partner, or they don't need to be, you know, as heavily engaged or as expert or as guiding as they have been before? So could this move to digital be another one of the potential threats to distribution? I know that's controversial and a loaded question, but it's interesting. And I think very different perspectives here. Justin, I'm going to go back to you because you have a product set that is the most complex, tends to be heavily risk engineered and consultative. So people may think that there's no digitization of it, but of course there is. So I'm very curious about your take.
Yeah, that's a good question, Brian. And
it's a terrible question.
I'm so glad this is being recorded. You know, I would say we're going to continue to see disruption, and those in the future, whether it be brokers, carriers, third-party providers, insurtechs, et cetera, they're going to have to continue to evolve and offer something really interesting and valuable to their customers. So I think the landscape is going to really accelerate over the next 3 to 5 years, honestly, in all regards. And I think, you know, you're right. More complex risks likely require more advice and more specialization. You know, for me, for my personal lines purchases myself, I do it all online. I don't have an agent. If I was insuring a large factory or construction site, you better believe I would have an agent and an expert to help me because I would need it. I think the other piece of it is how do we see insurance evolve over time? Some view insurance as a very old industry, right? We all work for, many of us on this panel work for companies that have been around for a while. You know, I think you're going to continue to see the evolution of products. that are much more client focused. We recently launched one called HPP, Highly Protected Project. It's focused on taking a construction-based insurance policy and interlacing different technologies into it. So the customer is effectively adopting technologies and an insurance policy at the same time. So the question everybody has is, well, are you selling the policy cheaper than what you did without the technology? And the thought is, time's going to show these technologies work. We're going to evolve in our strategies around that. And but it's exciting to see that change is, you know, there. I think if anything, it's going to accelerate, and we're going to see a lot of different movement across the landscape of brokers, carriers, and other third parties.
Yeah, I think movement's the operative word there. There's different ways in different places.
Right.
It's not a wiping out. Basil, you said something that stood out to me because I've read a lot of stats recently about what percent of policy volume is direct versus going through an agent or a broker. I haven't seen it on premium. And the premium number you shared, 70% on personal lines, 95% on commercial lines, is higher than the policy count, certainly in personal lines. So that sends a message that, look, there is a space that, you know, like Justin's buying his policy online direct, many people do, but there is a segment, quite a substantial one, that still does need advice, that has more complexities, or maybe that's not how they want to spend their time. Or they're not insurance people, so you know they don't have the natural expertise that a lot of us do. I'd love to hear your perspective on that, because you guys are moving very fast in digital and experimenting and pushing the envelope and IoT on the auto side, et cetera, yet also have a thriving agent base.
Yeah, and the fact is that it is an evolution, and customers are selecting how they want to do business, and how they want to spend their time, I think, is a critical factor. So if you're a person that has assets, there is some complexity to your coverage. If you have a home where you maybe have someone working in the home, there's some complexity to your coverage. Now, do you want to figure that out yourself? Smart person probably can. There's a lot of information available online, but some people may choose to have an advisor that does that for them. And what we also see, is that new writings, so a new policies are actually moving more digitally and more online and more direct. But a lot of people are happy with the insurance they have. And those renewal policies tend to be pretty sticky in our business, whether it's personal lines or commercial. So that's part of the reason you see that disconnect. And it's exciting time to be part of the industry because of all these opportunities and because of the evolution of carriers and also the distribution partners. They're changing. Some of them moving to fee-based instead of commission. Some of them moving towards doing their own marketing instead of counting on the carrier to do that. So there's a lot of moving pieces, and I think there's a lot of opportunity for different ways of winning.
Yeah. I'm glad that you touched on what some of the agents are doing and those distribution partners. That was another one of the questions that came in, understandably, perhaps out of concern. So what does an individual agent do, and how do we make those changes? And I think to your point, it's we don't stand still. We don't watch it and say, well, we still have our renewals, so that's that. You need to evolve. You need to think about your tool set, how you're engaging with the market. And it's not a flash in the pan. So how are you going to engage in a more digital world and stay relevant? So great point. Scott, what about, in your work as well?
Yeah, so first of all, in 29 years, I've heard that statement multiple times throughout my career. And
probably multiple times per year, I'm imagining.
It's still relevant, and I don't think we want to turn our heads away from understanding what technology can do to help us give better advice. But with that being said, there is a complex nature to what we do, and it's not really something that we design. It's designed by tax code or politics or whatever. I mean, things will most likely change again with our tax code. And I've seen that a lot. I mean, you think about the Secure Act that was introduced, and I'm not sure clients really understand many times. You can go out and buy a product, but you can't go out and make all those pieces of the puzzle fit together. It's complex. How does that interact with your attorney and your CPA? And bringing a group of professionals along may cost you a little bit more in the beginning, but it may save you millions of dollars in the end in terms of your business or your estate plan, something like that. I know for me, I have a personal relationship with a financial planner, and you know, this year again, we updated our financial plan, and there were things that we still haven't done to, you know, in terms of how things are titled and making sure that you care for the risk that could pose devastation to your financial plan. Also think about, you know, how companies have changed. And, you know, when I started in this business, you know, 2/3 of the companies had defined benefit plans, and you had a stream of income that lasted for life. And now those companies have defined contribution plans, and employees, they retire with a lump sum of money, and they say, Brian, please make sure we don't outlive this money. And that's a, you know, that's a real risk. You can't buy that on the internet. You can't buy that advice. You can't guarantee that income. And we see that in studies that we've done. I mean, in 2020, we did a financial wellness census, and 2/3 of Americans have yet to dabble in tech like robo-advisor strategies. So, and most of those said they never would. In fact, next to their spouse and their partner, they view a financial professional as the next person in line to, you know, to go to for advice. So I think we've got to embrace digital. As I said before, digital needs to have a little cloud on it that offers the customer an opportunity to click on it and say, I want advice, or I want some advice here in this product. But I just see certain scenarios, especially in retirement planning, estate planning. I don't see that the complexity is going to go away and clients are going to need us.
Yeah, I think that's a fair point. And while the tools evolve and get smarter and better as they have done and will do, the situations and the complexities and the nature of the risk will also continue to evolve and change. And it's not like risk is stagnant, and the regulatory environment, the financial environment, that's all stagnant. There's every piece is moving. So we can move together. I think, you know, back to your Omni Channel point, right, is if all pieces are moving and people can move in and out of the different ways to interact, we continue to meet their needs regardless of what channel they happen to want to touch us at in this moment, which includes the service delivery and claims and otherwise. Yeah, it's a great point, Scott. Mitch, looking across the industry and prognosticating a little bit, I'm interested in Avarka's take on this question. And I know it's an old one, and I appreciate everyone being willing to tackle it because it's always a loaded question. But I'd love to hear the sort of pan-industry view.
Yeah, so we believe that agents and brokers will be around for as long as any of us are on this call are around, if not longer. They are part of the insurance industry, primarily because people do need advice with complex products. On the P&C side, you have very, very specialized products often, and you need brokers that understand those products, that have relationships with underwriters and the insurers that know how to underwrite those risks. When we look at the retirement planning side and the life side, to Scott's point about complexity, that's going to remain, if not get more. And so you will need financial planning advice and support. Now, with all that being said, there's a couple of things to think about. One is that in Avarka, we say cyborgs are better than robots. So we believe that what we're going to see is more augmentation of that expertise with AI, machine learning, third-party data, and other technologies that will make the financial planners, that will make the brokers, that will make the underwriters better, more intelligent, and quicker in terms of coming to the right decisions and choices and recommendations. The second thing is we believe, and we're already seeing, a segmentation in these marketplaces such that at the lower end of the market, for example, small commercial insurance, where it behaves similar to personal lines, there you can apply more straight technology. Same on the insurance side with, say, term life insurance, very different than universal life policies with complex financial planning requirements. So there's going to be segmentation. There's going to be different uses of technology depending on where in the segment you are and what types of products you're looking at. But agents and brokers are here to stay.
I agree. We have run out of time. We have not run out of questions. So I will say this is probably 3 times the number of questions we generally see. So a super engaged group of attendees. Fantastic panel. Thank you everyone for joining and sharing some thoughts, and including putting up with my provocative and difficult question. But look, it's one that keeps coming up and people care about and want to know. So I appreciate the views on that. Thank you to WNS for sponsoring the event. And as a reminder, this is a part of the series building up to the Future of Insurance virtual event, November 16th to 18th. Check the chat right at the top. I put in the link so you can register for free today. Thank you again, Justin, Mitch, Basil, Scott, for joining us, and to everyone who participated today.